Hi, guys, and welcome to the 49th edition of the weekly trading wrap up, where we talk about the week in markets from a trader's perspective, what to focus on, and what to ignore. So let's begin. Again, we start with a picture of the S&P 500. This is the week of the 20th of October. We're getting late into the month. Where's the seasonality? Everybody was expecting September and October to be very bad. Well, it was for a little one day, and then back to all-time highs on Friday. We're looking here at Monday. The arrow denotes Monday, Tuesday, Wednesday, Thursday, and a big blowout Friday after the CPI report, I guess. So we finished at all-time highs. So let's talk about the technicals and the sentiment picture. As always, that's the first step. And guess what? Bullish. When you finish at all-time highs, this setup is bullish. I mean, we don't have to get any deeper into that, okay? Let's get rid of this arrow. Should we look at the moving averages? Why not? You'll see the 50, the 200, and the smaller, the shorter wave or the shorter time frame moving averages are all doing very well. Upward sloping, very strong trend. Okay. So, as you recall, last week the big deal was the fear and greed index. When we move into sentimentality, we had this go all into extreme fear right on the border. And guess what? Despite record closing highs, we're still at fear. Okay, and all the elements here are, well, momentum is greed, but everything else is pretty much fear or extreme fear and neutral. Okay, so you have sentiment still fearful. We have a long way to go before we go to greed. So that's why I was saying last week, when you had this big drop in the sentiment, we were basically like, 2% off the highs, not even. Like when we closed on Friday, it was 1.5% off the highs, and we were at fear to extreme fear. That's why I was saying, guys, this is a bull market. It's going to rebound. This is perfect if you're a bull. Okay, and this week confirms it. We're going to keep going higher because sentiment is still in the toilet. This is the CNN Fear and Greed Index. What about the AAII Investor Sentiment Index? Remember last week? We were saying, and we're going to keep saying it again, for months, we had like 4 weeks of extreme bullish, but still very heavy bears. Okay? Last week, when we had this big drop, okay, and we finished here, after this big drop, sentiment went even more bearish. And this week, still very bearish. Look at the bulls. The average is 37.5%. We haven't even hit that. We're back to average bullishness and extreme bearishness still at new highs. This bull market has massive fuel to keep going, okay? And as you can tell, what was our target? 710 to 720. Okay, I still expect to see that by the end of the year. I think that by the end of the year, we get higher. And this AAII sentiment, we're going to see more bulls come on. I'm hoping like we get extreme bullishness and the bears will drop like at 20% bearishness. That's what I'm hoping will happen. And it stays like that for like 4, 5, 6 weeks in a row, like really solidify the extreme bullishness because we didn't have it in the ending of September and October and mid-October. So, hopefully these new highs will fuel the sentiment to get even more bullish and even less bearish. But as things stand right now, I'm still very bullish and up until the end of the year, okay? Because we need a lot of time for the extreme bearishness, the extreme bullishness to set hold before I start really getting worried about this market. At this stage, I'm not worried. And like we mentioned in the beginning of this podcast, I wonder if like everybody was coming in September and October touting the negative seasonality. And guess what? We're almost at the end of October and we're at new highs. And guess what happens to seasonality end of October to like all the way to like April? Like 6 months of very, very bullish sentimentality. So everything is lining up for the bulls, and yet the bears are still massively out there. Fear everywhere. Stick with it. Still bullish. Okay? So in terms of macro, we're still very light, but we did have the United States CPI come out, month over month print, and we got a 0.2% increase month over month, and they were expecting 0.3. Okay, so that's very cool inflation, which means that the Fed is probably going to cut 2 times this year, and that's why we had a gap up, because it came out in the morning. We had a gap up in the market into new highs. Okay, as they say, never short a market that goes into new highs. So the macro here supports it, and the bullish picture is still intact. Okay, so let's move on to the third segment and keep this short and sweet. The big news, even though the market was very good, the big news was that gold took a massive hit. Okay, Monday, ironically, on Monday, this is denotes Monday. The arrow here denotes Monday. Tuesday, big hit. Wednesday, Thursday, Friday, consolidation. Okay, so it was getting extremely euphoric. Look, we had RSI into extreme territory this entire way up. Okay, something was going to happen, and something did happen. Massive selling on Tuesday for whatever reason. There really was no reason. There's nothing that was, the dollar wasn't doing anything. Like if you look at the Dixie, still hovering in this area at lows. You can see we're still fairly negative, consolidating here. Nothing really happened this whole week. If you look at it, nothing really happened. So there was no real catalyst except massive dumping in the futures market to take the price down. But this is perfectly expected, an amazing result if you're a gold bull, which I am. And afterward, you had a lot of consolidation. Okay, you had a lot of consolidation Wednesday, Thursday, Friday. This is great. Okay, this further brings in all these technical indicators down into the neutral territory, which is ready to fuel the next move up, because nothing fundamentally has changed. Don't get sidetracked. I will tell you when something fundamentally has changed. You will know when China and the BRICS stop buying. Okay, it's not happening anytime soon. So this is a good opportunity to start adding to your position. I was having people texting me, calling me, and saying, "Should I buy gold right now, like at the highs?" I go, "No, wait for a pullback." And pullbacks will always happen in bull markets. You don't have to worry about it. Look at GDX. Okay, GDX record highs, boom, back down. This is consolidation. Like if you look at the moving averages, right at touch the 50, this was the perfect time. And if it ever, like it's going to keep going up. If it ever touches the 50 or hovers around here for another couple days, a week, whatever, you should be buying. Okay. What I did personally on Friday, which is today, Newmont. Okay, Newmont had massive earnings. They beat by 18% and they beat on revenues. This is like they pared down debt to almost nothing. So you have a gold company that before they were like terrible businesses, now they are massive free cash flow generating machines with pristine balance sheets, almost no debt. So Newmont is in an incredibly good position, and I bought it when it was coming. I didn't buy it at the absolute lows, but very close. I took long exposure in various different ways. Okay, I don't want to get technical, but I got long very close to the 50. Okay, expecting it to retest the highs and go higher. So here you go. Everybody was telling me, can I buy gold? Can I buy gold? Wait, this is your chance now to buy it. I know you don't want to because everybody's scared, but that's when you're supposed to buy. And you have consolidation here in the gold space, which is incredible. Okay, so this is actually where you want to be going long. Pick your favorite, whatever you want, I like I told you, I like the GDXJ because if we go to the monthly chart on the GDXJ, which is the juniors, they're not even close to their all-time highs of 180, 179. Okay, they're at like 95. You have a huge, 40, not 100% return, but you could make, 80% return? Like 95. When it was around here, when it was at 80 or 90, it's like almost 100% return. Let's just say almost 100% return. And okay, you have almost 100% potential return with the gold price still staying high. And if the gold price stays high, and this is a monthly chart, but let's go back to the daily. If the gold price, let's get rid of the arrow. if the gold price stays high, these guys, the GDXJ, will rip. So look to buy. If you don't want to pick specific juniors, I mean, I have specific juniors, which is requires more skill to enter those names, to determine what juniors to buy, because the junior space is a terrible, terrible space to be in. You really want to buy just the quality ones that have a great story and have scalability, size, grade, great management, all that stuff. But if you can't do that or you don't have the expertise, GDXJ is your bet, in my view. This is the greatest risk reward out there right now in the space. Okay, so that's it for the gold and silver. It's your chance to buy. You asked me to buy. Well, here it is. God has given you that chance right now. Do something about it. Okay, the next thing that we realized that I would like to talk about is Trump's move into the quantum computing stocks. Okay, quantum computing stocks are GTI. Rigetti is the poster child of this stock. If you're in it, that's great. You're making a crap load of money. You bought the breakouts. However, these companies, to me, are like, it's not the same as like the critical metals players. Okay, let's compare these quantum computing stocks versus the rare earths and the critical metals plays that Trump is backing. Although Trump is going into quantum computing, the space is more like it's a fantasy right now. It's not really gonna happen at this moment. It might be 20 years away, 10, 20, even 30 years away. Okay, so we don't know. However, the action is very strong. So if you want to get into it, I'd caution it, because, like, look, this is the day on Friday where Trump announced a 20%, was it 20%? Like he was going to invest an X amount of percent into quantum stocks. They were bid and then sold off. Okay, so to me, let's compare. I mean, you have RGTI, you have IonX. Oh, is it IonX? Yeah. Maybe I forgot which one it was. IonX? No, I just can't remember the other one, the other quantum computing stock. IonQ, I think it is. Yeah, it's IonQ. Yeah, same pattern. Breakout, come back down, and consolidating, rips on Friday, today, and then back down. Okay, so let's compare these to the rare earths, which is MP. Okay, MP is doing fantastically well. Rare earths are more real of a move because you know that Trump is going to get in on it, and it has a geopolitical element to it. It's very important. China is buying as well. The U.S. is very, 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 very vulnerable when it comes to critical metals. So we'll be buying rare earths, lithium, all that kind of stuff that it needs to procure the supply chain. Because without it, their computer tech industry is dead. So they need to have these elements in place. Whereas quantum computing is just a pipe dream. Okay, it's 10 to 20, at least 10 years to 20 years away. Whereas this, the rare earths, is immediate, and it's going to happen now because the Trump administration will devote resources into this space. So on this down move, I'm looking to enter MP. I also, what was the other one? I can't really remember at this point. Oh, yes. This is the one that I entered into today. United States antimony. Antimony is a very rare, it's a rare market. It's necessary. It's a very, antimony is an element that people use to strengthen steel. It's a very good, it creates a very good alloy for steel that makes it stronger and more resilient. It's very necessary, and its price is skyrocketing right now. Like if you look at the antimony ETF, I guess. Is there an antimony ETF? I don't know. Same. This is antimony resources. I guess there's no antimony ETF. Anyways, if you look at the price of antimony in the OTC market, I guess it's on fire. So you have here US Antimony Corp, which is another antimony plus, US, which means that Trump's going to invest in it. I love this action. Okay, this consolidation area right here, it's like consolidating and squeezing into here. So I purchased some. I did it via option structure, but I'm long this company UAMY. I prefer to go long these rare earth and not rare earth, but critical elements, critical minerals plays, because I'm pretty sure that Trump is going to get into them bigly, as he said. So here you do have a catalyst. You do have Trump going into it. Whereas quantum computing, it's a crapshoot. Okay, so you want to be in stocks, and of course, let's follow LAC. LAC is pretty much the same, consolidating here, but this chart for UAMI looks much better. So I'm in it here. So that's it. Like when you're talking about the play, if you had to choose between two plays, okay, between two themes, would you pick quantum computing or would you pick the critical elements play? I would pick critical elements play. Although Rigetti, you can't go wrong with. I mean, those guys made a lot of money. Whoever bought these breakouts is making a lot of money. I just don't have as strong of a fundamental view on quantum computing as I do with the rare earths. Okay, so like especially the leader would be MP, looking to get in. I haven't yet. I would like to see some more consolidation here before entering. Although you could enter a partial position with a stop. So that is my view on the quantum computing versus the critical metals play. Let's recap. Gold, guys, time to get in. At least take up. This is your, wake up call. It's telling you to buy a little bit. Have a stop if you must. Of course you must. If you want to enter it with options, you can, structure your stop based on the options. So gold, I think it's time to buy now. The technical picture, SPY, very bullish. And we talked about the sentiment still in fear. Plenty of time to get this all the way to greed and extreme greed. And AAII is still very fearful. No bulls. So this is why I think I'm bullish at least until the end of the year. Because we're going to have seasonality come in. We're going to have, I don't really care about seasonality. I mean, I haven't seen any statistically significant results that show that it works. But, when nothing else happens, I guess you can rely on it. But to me, it's just a reflection of the overall upward drift of the stock market. So we have the Christmas rally coming up. We have Black Friday and Thanksgiving coming up, and we have fear in the sentiment. So bullish, probably until the end of the year, until something else happens. Probably 2 rate cuts happening. So that's how we stand. Bullish in the market. Sentiment is in the toilet. I like gold at this point to re-enter it, and I prefer the critical metals play instead of the quantum computing play. So that's it, guys. Looking forward to next week. Later.